Planet Labs has opened a new office in London, steps away from the UK Ministry of Defense and NATO representatives. And in the same week, the CEO sold $5 million worth of stock. Two stories, one looking very bullish and the other looks alarming on the surface. And today I'm breaking down both because I think understanding what's going on here is the difference between making an emotional decision and a smart decision. Let's get into it. Welcome back to Guts Capital, where it takes guts to invest in what others overlook. I'm your host, Jared, and if you're new here, I cover Planet Labs and the space economy before the mainstream catches on. So make sure you're subscribed, and do me a favor, if you learned something, hit that like button. Planet just announced their opening of their UK office in central London, and the location is not an accident. The office sits steps away from Westminster and Whitehall, the heart of the British government. It's designed to facilitate direct engagement with the UK Ministry of Defense, the Department for Science, Innovation and Technology, NATO alliance representatives, and key commercial partners. Will Marshall, he himself a British founder, said the UK is in a prime position to lead in downstream space economy services. And the UK Space Minister personally welcomed the announcement, calling it a powerful vote of confidence in Britain's world-leading science and technology ecosystem. Now here's what makes this more important than just a real estate decision. Planet already has deep roots in the UK. The Goonhilly Earth Station in Cornwall is a cornerstone of their satellite operation, supporting high-frequency data downlinks from their constellation of over 200 satellites. The UK is the only country outside of the United States where Planet has executive leadership based locally. Europe already represents over 30% of Planet's global team. So this London office is not a startup. It's a move of a company that has already won UK government contracts and is now physically positioning itself inside the decision-making environment where the next round of contracts will get awarded. And that's exactly how you build a defense and government moat. You show up exactly where the decisions are being made. Now let's address a story from last week that has some investors worried. Planet Labs CEO Will Marshall sold over 200,000 shares on July 10th, worth approximately $5.2 million. And I want to be direct with you about what this actually means, because I honestly think a lot of retail investors are going to see this headline and automatically jump to conclusions. So the most important fact here is that this sale was executed under a 10b5-1 trading plan that Will established over a year ago in July of 2025. So a 10b5-1 plan is a trading agreement that insiders set up in advance to avoid looking like they're trading on insider information. In other words, Will didn't wake up one morning and decide he wanted to sell over $5 million worth of stock. He set up a plan a year ago with a predetermined time and price, and the plan executed automatically. After selling 200,000 shares, Will Marshall still directly holds 2.7 million shares, worth over $70 million at current prices. He reduced his position by 7% and still holds 93%. He still holds restricted stock units that are scheduled to vest quarterly through December, meaning his financial future is still deeply tied to wherever the stock is headed. The Motley Fool directly addressed this and said that investors should not be concerned about this transaction. And I agree. If Will was genuinely worried about the company, I don't think he would have kept over $70 million of his own money tied into the stock. And like before, guys, I'd rather give you the perceived pros and cons and full context so we can all understand what's going on and we can all make the right decision. And honestly, that's what Guts Capital is all about. Here's a bigger picture story that two separate publications identified independently this past week. Yahoo Finance and Simply Wall Street both published analysis describing how Planet Labs is quietly repositioning from a satellite vendor to a premium geospatial intelligence partner. This is the shift I've been talking about since my first video. Planet Labs is moving up the value chain. Instead of selling raw satellite photos, they're selling AI-powered intelligence, automated monitoring, crisis response compatibility, and defense-grade analytics. That's a completely different margin profile and customer relationship. And the numbers are backing this up. Their fair value estimate now implies a 78% upside from current prices. The bull case projects $763 million in revenue and $56 million in earnings by 2029, requiring 31.5% annual revenue growth. Given that they just reported 42% revenue growth last quarter, that target isn't as aggressive as it sounds. The key point is this: Planet is still being valued as a satellite imagery company, but the business is becoming an AI-driven platform with sovereign defense contracts across NATO member countries. Those are two very different valuations, and the market still hasn't made that correction yet. Now, I want to ground all of this with one real-world example to show how the commercial side of the business is working. Planet just published a new case study with Sadagro, an agricultural technology company in Brazil. Sadagro is using Planet's high-resolution satellite data to help sugarcane farmers maximize margins through precision monitoring and yield optimization, where farmers saw a 260% ROI in year one using Planet's data. These aren't press releases. These are commercial customers in the real world building profitable businesses using Planet's infrastructure. Agricultural, defense, government, climate, and maritime. The data keeps finding new customers and new use cases. And every new customer category that gets unlocked is a new layer of revenue that wasn't a part of the original thesis. All right, guys, so for a position update, I was able to pick up a few shares last week as we slid into the low $20 range. And I was able to average down slightly, but I still have a cost basis of around $24. And this past week gave me two things that I always look for: a bullish catalyst that most people don't talk about, and a bearish headline that falls apart the deeper you dive into it. The bullish catalyst is the London office. It shows that Planet is building a physical presence in one of the most important NATO member countries. So that's a long-term moat getting stronger. The CEO selling shares is the bearish headline that falls apart. It was a pre-scheduled plan executed after a year, while he's still maintaining 93% of his position. So to me, that's not really a warning sign. That's an executive managing his personal finances while still being deeply invested into a company that he built. All right, guys, so as we close things out, in my opinion, the thesis around Planet is continuing to get stronger as they expand their physical blueprint, as well as make the shift from a satellite imagery company into an AI-driven platform, also proving that their technology and data not only works, but it also provides ROI for their commercial companies. So anyone out there that understands what this company is building, they'll continue to buy shares and they'll continue to hold into the future. And like always, I'm your host, Jared, and you're watching Guts Capital, where it takes guts to invest in what others overlook. See you guys in the next one.